Welcome back to the channel. Today on this episode, I want us to look at the meaning of buying the dip, whether buying the dip does really work, and how long can you continue to buy the dip. Buying the dip, is it on the way down or on the way up? We will have a look at two stocks that have recently been in the position that a lot of people were buying the dip, and I'm talking about Alibaba and Zoom. Alibaba and Zoom have continued to drop in their stock price. It's a different thing on the valuation. It's a different thing when you look at the balance sheet and make valuation for Alibaba and Zoom. But when it comes to stock price, you would see that there's disparity between what one of them is doing in stock price and what the actual balance sheet is telling us. Sometimes, or this is the scenario where you say company is not stock price is not the company. Sometimes the stock price does not reflect the business sometimes does not reflect the stock price. So this is the typical scenario for these two stocks. Let's have a look at these stocks. Let's have a look at the balance sheet. Let's see if we can get any information on why these two stocks have continued to drop in stock. So guys, we are looking at Zoom. This is Zoom details. It closed at $98.12. It lost about $5.21, which is about 5% on the last day of trading. That was yesterday, 11th. Zoom market cap is 29.35 billion. The EPS is 21.82, and the PE ratio is 21.82, and the EPS is $4.50. Zoom is not paying dividend at the moment. Let's have a look at their financials. You keep wondering why the price of Zoom is has plummeted from the all-time high. I still don't see. Here is the income statement. You can see 2019. This is 330 million. It grows from 330 million. This is like a double, 622 million. This is during the lockdown. Zoom, the lockdown actually favored Zoom. Stay at home. Zoom is one of those leading. I mean, he was the pioneer of. I mean, one of those stocks. Technology that a lot of people use staying at home. 2021, you can see this is 2.6 billion, and at present, at the moment, the last data for 2022, which was the last quarter, was 4.09 billion. This is growth. Uh, it You can see the increment from 2021 to 2022. Now let's have a look at the balance sheet. It just shows that Zoom is making money. Total assets, you can see the asset has grown as well. But look at their liability, 1.7 billion here. Look at its liability, 1.7 billion. So now look at the free cash flow, the amount they can use to do anything. They can choose to buy back, reinvest, do acquisition, whatever they like to do. Now look at their free cash flow, meaning that Zoom can actually decide not to even have that liability. They have their money in their account. So Zoom balance sheet financial is not doing badly. I still don't see the reason why the stock, fine, maybe on the valuation side, the price seems to be, in comparable to the market cap now. But then let's have a look at Alibaba. This is Baba, the Chinese giant. Baba closed at $86. That means it lost $6.21 on the last day of trading, which was about 6%, 6.68%. The market cap is 246 billion. Compare this to Zoom. Look at the market cap again for Zoom. Let's understand this. For Zoom, the market cap for Zoom, just be sure of this again. 29 billion. Now look at it for Alibaba, 246 billion. Let's have a look at Alibaba P ratio is 22.95. Then the EPS is $3.78. Alibaba is actually, let's see, they're not paying dividend as well at the moment. Let's go to their financials. The total revenue. Here you can see 2018, Alibaba revenue is 250 million as at 2018. 2019, 376 million. You need to know that Alibaba is a big giant. It's like an Amazon of the Chinese, the China Amazon. This is Alibaba 2021, 717 billion. And at present, the last one is 836 billion. Now look at let's have a look at their balance sheet to see um, their liability. Their liability is 615 billion. Yeah, but you can see that it's a growing company. It's even more than 20%. The growth is more than 20%. Now let's have a look at the cash flow, free cash flow. This is the amount they can choose to, to pay their debt. They can choose to do buyback. They can choose to do acquisition. They can choose to reinvest. Alibaba has 130 billion. They can do. You choose to do anything. If they choose to pay their liability, it will only take them. Let's see, really take them just 3 years. They will pay their liability. They can choose to pay it in 3 years. Let's have a look at the chart to see price action. If there's any reason that we can still point to why Alibaba's stock price has plummeted. This is a typical scenario of the market. I mean, the stock is not a reflection of the business. Sometimes the business is not a reflection of the stock price. So, guys, we are looking at Alibaba on a daily chart. This is um, as you can see, Alibaba has been on a downward trend since since last year, even beyond. It has been on a downward trend. Let me draw this trend line here. No, sorry. Um, Let me draw this. You can even see the moving average. The moving average shows you is actually going is on a downward trend. As you can see, what it has been doing is lower low, lower high, lower low, high, lower high. So it's been ups and down in between this channel, and we're here. You know, I'm not sure there's a support there. Let's have a look at it on a weekly chart. We'll see better on a weekly chart. Okay, as you can see, there was a support that was broken there, but let's have a look at it. Even on a weekly chart, it's obvious that Alibaba has, in fact, if I call it a falling knife, I won't be wrong. There's nothing more than a, to describe Alibaba on the chart as a falling knife. I won't be wrong to describe it like that. But you can see this is a typical. I mean, the purpose of this really is why buy back. I mean, why buying the dip? So if you are choosing to buy the dip while it's here, okay, it started going back up. Now it's down again. You buy the dip, it looks as if it's going back up here. Again, it's buy. You buy the dip. So obviously you continue to buy the dip, buy the dip, buy the dip, and you will find out that the more money you put, the lesser you get, and it's still going down. So obviously buying the dip on the way down, it's very risky. Um, at this point, here now, what I will be looking at is I I will be looking at, okay.
let's say there's a support here, here because I don't even see one. Just here. Here, let's say this support code, you will have to wait for the chart. I mean the candle to come up and cross this moving average, 20-day moving average up. If it crosses this 20-day moving average up, then I would say, okay, it might be the time to actually buy the dip again, because then you know that it has given a sign of a bullish sign to start going back up. However, look at, we're actually trading below 20-day moving average on a weekly chart. On a daily chart, we are trading below, it's also below 20-day moving average. But as you can see here, it has been on a downward trend. In fact, let us look at what it has dropped from the high. Alibaba has dropped Alibaba has dropped 60. Here it shows that it has dropped 68% from the all-time high of 319. 68%. That's a lot. That's a lot for Alibaba, for this stock. For those who have been buying the dip, how long will you continue to buy this dip? How long can you continue to buy this dip? Let's have a look at it again on a daily chart. The daily chart just shows a downward trend, and you continue to buy the dip. You have to, at this point, you would say, oh, there's a support or resistance here, which was also broken. Support turn resistance here, you see? But then it broken it again and it's on the way down. So you can't continue to buy this dip. There has to be a point where you will assume, or you will make decision to stop buying this dip. Let's have a look at Zoom, because Zoom is also a stock that has been doing. You see, I've drew this earlier on. Zoom is very similar to Alibaba. It has just been going down, from the all-time high of 580 or so. It has been, Zoom is now $98. Let's have a look at it on a weekly chart. Then we check what it has dropped from the all-time high, 588. Let's have a look at what it has dropped from, what Zoom has dropped from all-time high. Zoom has dropped 83%, 83%, 83%. I still, the balance sheet doesn't tell us this, but all I can see here is there's actually no sign of any strong support around here. So we might be looking at Zoom at even about $60 or even less, because it's just on the way down. There's nothing stopping it. There's no strong support that has held in the past. Something not at all. It's just breaking every level that you think should hold at all. So for Zoom, buying the dip on Zoom, I'll caution, very well. At this point, I don't think anyone should be thinking of buying, except you see a bullish reversal candle and that it goes above 20-day moving average. That is when you would say, okay, there's been a reversal on Zoom.
We have seen the chart, we have seen the balance sheet, we have seen for both of Zoom and Alibaba. Please do not add any of these stocks to your portfolio because you have watched a program or YouTube channel. Make your valuation. Make sure these stocks are fit for your portfolio before you buy any of them. check their balance sheet, check their cash flow. Thank you for watching this channel. Thank you for subscribing to our channel. We will continue to produce content that will support your investment journey. Thank you. Please call again.